evening. I'm Peter Check from ShadowTrader.net, and this, of course, is the weekend edition. Good to be back with you as always. We've got a lot to talk about this week. Market's kind of on fire a bit here in the late June. Very, very bullish. But we're going to talk a little bit in our lead story today about whether or not this might get derailed as we get closer and closer to that July 9th tariff deadline. We already saw some volatility kind of cutting in both directions today on Friday the 27th. That had to do with some tariff news. So we'll delve into that. We got a number one draft pick. We're going to get into charts as always, especially a little bit of a look at the monthlies because we've only got one more day left in the month of June. So all of that and more in today's weekend edition. Less talk, more charts. Let's go. Let's take a look back at this very bullish week. We always begin this program with what we call the week in review, where we look at the 11 sectors of the S&P and a smattering of other key instruments that I believe are important. But as you can see, as far as the 11 sectors are concerned, everything was very bullish, pretty much like straight across the board, except for energy. Crude is in really a big retreat. We had that Iran news, and it was a gap up in crude on that, and then it just fell from there. So there was really no buying interest other than an initial knee-jerk reaction to that Iran news, and then we've been pretty much just falling all week in crude. So crude stocks were down. Luckily for the S&P, that's a relatively small, about 3% weight of the whole S&P. So you're not going to see a lot of big difference in the market when energy stocks are down. Same thing with the utilities and materials and real estate. They don't kind of help much. All the action is really all about what happens up in what I call the front end of the S&P. And you can see that all is very, very bullish up here. That's technology up 4, financials up 3.5, and healthcare up 1.42. Healthcare, by the way, is still kind of languishing. I don't recommend these stocks at all. They're just not really moving with the market. The main drivers of the market are right here, basically. And interestingly enough, I think that when the tone gets a little bit more bullish, you'll see staple stocks down like this, right? You'll see a notable difference between staples and discretionary, which are the two measures of consumer activity, really. And discretionary obviously was up firmly like with the market, but the staple stocks really kind of fell. So kind of, to me, a little bit of a gauge of less fear out there. Bonds ticked up a little bit. There's a little bit of talk that there's going to be some renewed interest in bonds, kind of propping them up because of all this stablecoin news, which is kind of interesting, right? We had the legislation passed this week for the stablecoins, and you saw that Circle stock rally up and then fall back down. Coinbase, which we're going to talk about a little bit later in the program, was also very strong because they're involved in that issuance as well. So there's a little bit of a tailwind for bonds, but as I always keep saying in this particular section, I still don't think it's a trade anywhere to the upside. Overall, it's not going to work in the bigger picture. I think it's probably going to be down. Obviously, we saw yields pull in a little bit, which kind of ties in with the bonds being up. Volatility got absolutely destroyed once again. No surprise in an up market, but down 22. VIX kind of deep down in the teens. Once again, gold had a very negative week, much to my chagrin. I'm long a lot of GC contracts as per my last Shadow Shorts update. But we did come into trendline support today on gold. So me personally, I feel like the downdraft is now over if you're a gold investor, because we have now fallen down to the primary trend line, which is obviously in a big uptrend. So right around, in the high 3200s or whatever. So we'll see where that takes us. Crude down about 16%. We already talked about that. That's tying in with the XLE move. And Bitcoin had a decent week at up 6%. And Bitcoin is really just consolidating nicely here in the 105 to 110,000 area. And I think kind of setting up for the next move higher. It's going to push it past that peak and maybe take us to about 125, 130. So we'll see. So overall, pretty bullish across the board as far as the week in review is concerned. And remember, as a quick reminder, these are always measured from the open. So it disregards all gaps that may have occurred between Friday and Monday. This is only from the Monday open to the Friday close. All right, so that is our week in review for the week ended June 27th, 2025. Okay, what's really going on? This is the section where we talk about basically what's really going on in the broad market charts, S&P and NASDAQ 100, which are, of course, the two most important benchmarks that we look at all the time. I thought we'd just kick it off with weeklies here just because, or monthlies, excuse me, I apologize. Monthlies just to show the candle here because we are on June 27th, there's only one more trading day in June. So obviously bullish. I don't think the monthlies are really the story. We're going to get shortly to what I think the story is here. But whenever we're at the end of the month, we always want to take a quick look at the monthlies, see where we are. NDX totally obliterating the all-time high, way above with a strong candle here. So expect at least some movement higher when you have a strong candle like this in the next month. You expect that you go a little bit higher. Even if that candle doesn't close bullish, you do expect that you will probably best it, for lack of a better term, in the near future before that month is over. So my take here on the S&P daily is the fact that you took out the all-time high here. You closed right up against it on Thursday and then finally took it out on Friday. And I'm kind of shifting my focus now to this channel line. The channel is when you connect highs kind of going across. And that's going to take us right into here, which could be early next week. That's about the 6230 area. So I would be watching closely for that. Like if you're wondering where this rally is going to end, maybe get out of some longs or maybe even initiate a short, I'd be looking right there. 6230 is going to be a key area as to where I think the market is going to probably turn around. In the NDX, it's not as clear because you can see that we've already crossed the channel line. This was the prior all-time high, the 22222 level, which is an interesting number. If I remove that, you can see that we've actually already crossed it. So this is interesting that when you start trading on the other side of a channel, I always feel that that's somewhat unsustainable, basically. You can think about it that way. But again, because there's no channel above us and we're already through it, there's no real specific area that I can tell you in the NDX where I think we may be pausing a bit. One thing that I would be looking for into next week is what is the overextension from the 8? The yellow line is, of course, your 8 overextension. This is just something that just works all the time, is that you move here above and you just start to kind of back off. As soon as you get to a certain area with a certain amount of overextension from the 8, that's when you start to pull away. So just kind of watch closely, kind of eyeball and see how far above that 8 you can be. And if it gets a little bit overextended, that's probably when the market is ripe for a pullback. And that's about it chart-wise. But before we get off this, I'm not going to do a sector watch this week, but as we're talking about the charts, I wanted to talk about the kind of connection between financials here and their all-time high, which they have not hit. And that could be also an area where the market kind of takes a pause. Remember, this is the second largest sector. And so one of the things I'm going to be looking for next week is I'll be setting an alert to see if we can get to here, up into this 5260 area in the XLF. And then the big question is, does that tie in, as I was saying, with the 6230 area in the S&P 500 on the daily chart? And on to our lead story today, which is about tariffs and whether or not the tariffs will disrupt the market materially in the month of July. And I say that specifically, and we're talking about it now because we are getting closer to the July 9th deadline on tariffs. So just a quick refresher as to what is going to happen on that day. Tariffs of up to 50% on the EU. The 10% baseline tariffs will remain in effect. The country-specific reciprocal tariffs will return. If you recall, that was like some of the stuff like against Vietnam, Cambodia, that kind of disrupted supply chain and manufacturing of like fast fashion and sneakers and things like that. That stuff could be coming back. And most importantly, right here, the 30% tariffs on Chinese imports remain in effect. Now remember, all of this is somewhat fluid in that the administration has changed their mind multiple times before. That could happen again. The proverbial can may get kicked down the road further on with another delay. But if not, this is what's going to be happening. And I think you can be pretty sure that the market is not going to like it because it already showed us how it feels about these tariffs basically today on June 27th as I'm speaking to you, because you probably saw this headline here, which is the fact that Trump ended U.S. trade talks with Canada over a digital services tax, right? That was earlier today on Friday, and the market did not like that. You saw the market come off the highs very aggressively when that news came out. So just something to keep in mind, that this sensitivity is there. And as we get closer and closer, playing out that first week of July, getting close to that July 9th, this stuff is going to be in the headlines, so just be aware. Now, beyond that, these are just a couple of other headlines that I wanted to leave you with, which all kind of ties into the fact that July might be a little bit less bullish or more nervous, maybe some more two-sided trade coming. The next one was that this one here, about late morning today, I'm getting all of these just straight off CNBC, by the way, so this is no big secret. Deep inside U.S. economy, more sticker prices start going up due to tariffs, and inventory is headed down. What does that mean? Simply that goods are a little bit more scarce, prices are going up. What does that lead to? More inflation. Higher inflation leads to what? Potentially the Fed not backing off from where they are now with the target rate of about 4.25 to 4.50. And as we know, this is what the market really cares about. I've been talking a lot about the CME FedWatch tool on this show. I'm not going to go into it today, but we always talk about it around the Fed meetings. There is still not much of a chance of a cut at the July meeting. The only time the odds actually go up is pushed all the way out to September. And what you want to be watching for very simply is, does that get pushed out even further if this inflation remains elevated? Are we seeing more stuff like this where we saw CPI actually rise, right? That was earlier today. Core inflation rate rose to 2.7% in May, more than expected. Fed's preferred gauge shows, and that's important, remember, because when it says preferred gauge, which it is, this is their preferred gauge of prices and inflation. This is what they are going on in terms of making decisions on whether to raise rates or not, or keep them the same. And if the inflation rate remains stubborn, then as I was saying earlier, where's the impetus for them to lower? So we're going to be kind of watching closely how those percentages are playing out in the CME FedWatch tool going forward into September as well. But again, none of this has to happen. All of this is just a maybe. We'll see if there's going to be some sort of a changing of the mind. But again, July, I think, could be a little bit more volatile with this tariff news and inflation news coming down the pipe. Time now for a little bit of market profile, one of my favorite subjects, very near and dear to my heart. We're really looking at the ES futures through the lens of the market profile distributions chart, if you will. I'm still working on the market profile course that I'm really excited to bring to you. As you know, I was kind of quite ill a couple of weeks ago, and I'm still kind of dealing with the after effects of this lingering cough. So I've been kind of putting off the recording just a little bit, but I've got the whole thing mapped out, and I'm really excited to share it with you. It's going to be very comprehensive, soup to nuts, from basics all the way to putting it all together with real life examples of how the profile works. You know, not just theory, but application, showing you how prices actually react to the different market profile levels, and the fact that all of these, you know, profile theories actually do work, and set up trades, which is the most important thing, right? The main thing of any type of analysis in the market is basically, can I make money with it, right? That's really all it comes down to. You don't want to just be like doing something just for the sake of whatever, intellectual curiosity or whatever. It's got to be something that's in your toolbox that can actually make you money and create some setups that you can profit from, or at the very least confirm or deny your bias, so that you're using it as a valuable tool in your toolbox while you're trading in larger time frames, so to speak, or any time frame for that matter. So that being said, stay tuned for that. I hope to have that out shortly. Here's where we're at, basically. So there's a number of nuances that I want to point out here in the profile. Obviously, value is clearly clean to the upside, and here it's clean to the upside. And one of the first things I wanted to talk about is that we are coming into where there is potential reversal in the market, just because, you know, obviously it's been up quite a bit. The market doesn't move in one direction forever. And one of the things that I want you to look for, and I have to give some credit where credit is due, my good friend Terry, who is the creator of this software, he actually gave me this idea. He said that oftentimes when there's a turn, you can look for a reversal in value that is like an island reversal, and that's important. So one of the things that we want to be watching for next week is, will there be a value area that will be breakaway like this to the downside? And it's important to note that we're talking just about the value area, where 70% of the futures volume trades. That's very, very important, because actual island reversals are very, very rare in the market. You don't see them very much. What is an island reversal is, if you can imagine, I'll just draw this crudely. Let's say you have a big, you know, candle like this. to the upside. And then there's a gap up here, and you have this kind of like small body candle like this. And the important thing is that there's a clear gap here in between where there's complete space, and then you go down the next day. And this is what we call the island reversal, because this bar is absolutely like an island in and of itself, because it has a gap here and a gap here. So there's not touching. The entire bar has to be completely separated out, just sitting out there like an island. And again, this is relatively rare, right? This is a relatively rare reversal pattern you don't see very often. So in the profile, something that happens more often and could happen next week is that the value areas, not the entire range, but just the value areas, may create an island reversal, meaning you've got your value area here. Notice that this value area is clean. We call that clean to the upside, meaning it's not touching at all. And if there is, let's just say this happens on Monday, I'm kind of not expecting this, but regardless, it doesn't matter. Some sort of a gap down, doesn't matter where it is, could actually be a gap up, because remember, we're talking just about where value develops. But regardless, let's just say, and I'll change it into yellow so it all matches, that the next value area is actually like this, meaning that it's clean to the downside. So you have complete separation here between the value areas of this one, this one, and this one, and this one. And that can be a reversal signal, which is kind of interesting. So again, kudos to my friend Terry, who is the creator of Window Trader software, who pointed that out to me just relatively recently. So I'm going to actually start watching for that to see if there is a value area island, so to speak. Okay. Now, that being said, value is clearly higher. I think we had decent POC migration today, which is bullish. POC migration just simply means where the fairest price to do business ends up within the range. Is it in the upper third, lower third, in the middle? This is the middle right here, which is the halfback, as we call it. You see kind of the dark yellow line. So I would say this POC is in the upper third, which is relatively bullish. It tells you that they were committing volume at a relatively high price up here. You don't see too much taper up here either. Notice that when we rallied, where's the small numbers? Not really. It's all pretty big. There's just the last two right here, which is pretty insignificant as far as the taper is concerned. So that's the reason why you have the value area, for instance, expanding very close to the high of the day. That to me is a very healthy sign, because remember, it's so important to understand that price and value are two separate things. And it's when value is confirming price that price is actually more real, price is actually more fair, and you can think of it that you should trust it more, so to speak. And so this is more bullish at the moment, that the value area expands all the way to the upside and didn't leave a whole lot of excess up there without the value area. So just kind of keep that in mind. So for now, I don't really see any stopping to the buying as of yet, but of course, every day is a new day. Now, going forward, or I should say a little bit below us, we've got a good amount of poor structure that is in need of repair. And as I always like to remind people, it doesn't have to happen. It can stay there for a while. But as that poor structure stacks and stacks and stacks, virgin points of control, of course, are the most obvious example of stacking. But virgin points of control are really only one type of data point. You've got single prints, you've got gaps, you've got all sorts of other structural deficiencies, so to speak, that when they start to stack up, it tells you that the momentum traders are getting ahead of themselves and the market is ripe for a liquidation break, right? So keep that in mind. So below us, we've got single prints from the 626 section that haven't been cleared up at all. I would probably be thinking, to be honest with you, that this low is a weak low. And why is it a weak low? Well, a weak low is one that is very nuanced right to a prior technical level or market profile level. And that's important to note, that that low of the session came to where? Right to the prior high, to the high rather, of a previous session. That means that going forward, it's probably going to be weak, because the buyers who are buying here, they are momentum buyers. Remember, the big institutions are not this nuanced. They are not granular at all. They have big orders to fill, and they're going to just be filling them little by little, kind of supporting the bid if they're buying or supporting the offer if they're selling. So shorter term traders are in control here. That's fact. And thus, if we were to reverse back to this area, here's a trade idea for you. Short ES right here, basically, right? Which is, also not, it can be kind of obvious because it also would be the low of a bar, but it's not the low of the current bar. It's actually 2 days back. So keep that in mind. Now, here in the 625 session, we left a virgin point of control. And I think this area is noteworthy. I talked about this a lot in the pre-market perspective, which is my morning newsletter with video. If you're interested in this type of analysis, definitely hit our website under the pre-market perspective section, and I can send you that every morning. Very, very inexpensive. I do that for 20 bucks a month, kind of almost as a loss leader because I'm so excited about this type of analysis. And I feel like it's like the entryway or gateway drug, quote unquote, to ShadowTrader. So you can check that out on our site. But regardless, I was pointing this out in the pre-market perspective morning newsletter that you've got POC here, settlement here, and settlement here. And none of this area has been tested as of yet. So it's kind of noteworthy to me that you've got all of this market profile reference right here, all in one area. So holding above it is bullish, but if the market was to get through this area, I would think a lot of this would be overhead supply because you've got a lot of value here, not only from the RTH sessions, but look at how fat the overnight distribution is right at that level. So the most time was spent right there in that overnight session, which also translates to the fact that you probably spent the most volume there as well. As you know, I measure my points of control through volume, but time is really the more classic way of market profile charting. The theory really is more built on time. So, and I look at both, to be honest with you. If I see a very wide distribution in an RTH session, I'm always marking that off as a TPO point of control in addition to the volume one, which I'm following. So keep this area in mind. Below it, you've got another set of single prints. And this low is also a weak low. Why? Because that low end there came right into the low end of another set of single prints, as you can see here. I'll just make this a little bit bigger for you so you can see it clearly. But notice where that low was, right to the bottom of a single print section. Endpoints of single print sections are almost always turning points in the market. That's very important to note. These are nice nuances to have on your charts. And again, I can point all this out for you every single morning through my report before you start trading. Beyond that, we've got a gap. I've got to refresh this. Let's just request that tick data. So these volume numbers are correct. You can see that they're kind of wrong there. Okay, so you've got a top of a gap here, as yet unfilled, and it's a really large gap, to be honest with you, from 6109 to 6081, so about a 30-point gap in the S&P. And inside of it is another virgin point of control. This is the VPOC from 616. Remember that overnight activity does not repair any structural deficiency, and thus that virgin point of control is still there because it's inside of the gap. There was no regular trading hours activity clearing it there. So I want to keep that in mind. That is also going to be noteworthy going forward. You want to just keep all of this in your narrative. And this 622, let me just delete this. That's not important. And this one also is a VPOC that I didn't even put on. I need to add this one. See this area right here? This is a VPOC right here of 623. So you've got another one here, and I'll just put it in. Oh, 6.23. So that is also a virgin point of control as well. So those are, starting to stack a little bit. There's not that many of them, but just kind of keep that in mind. But these are the things that are happening below us. And again, I can't reiterate enough as I leave you off this market profile that this does not mean we have to come down. The way you want to look at this is that if we come down, these are the areas where the market can pull back to. These are the areas that the market can smash through, like those weak lows, etc., if it was to come down here, right? And then, of course, if this type of nuance stacks much bigger than this, like usually I like to say if you have like 5 virgin points of control below you, okay, that's when the market is just really overbought and the odds are really, really huge that it's going to come in. Doesn't mean it's going to clean up all of those BPOCs, but it's going to come in a good clip. So just keep that in mind. So watch to see over the next few sessions to see if this type of nuances tend to stack below us. Because remember, what they're also telling us is that shorter term traders that are more momentum based are controlling the market, and they are weaker hands, and they are always going to be the ones that are going to leave this type of poor structure in their wake. Time now for our number 1 draft pick. This is where I leave you with one good chart that I really like that could be in play in the week to come. And this week it's Coinbase. which was extremely strong this week. And I like it here on a pullback for maybe a reason that you might not expect, because I noted something on the chart that not a lot of people look at, and that is the anchored VWAP. And the anchored VWAP is basically where you just set a VWAP from a certain point on the chart, you anchor it to a point. And I just wanted to point out to everybody that if you anchor the VWAP, or volume weighted average price, from the open of this bar, which is right where, notice how the volume increased here, and obviously this bar is where the rally started. This is all just consolidation, and then this is the rally higher. The anchored VWAP is tying in perfectly with the 8 EMA. So you have this confluence of support coming in just below us at this 330 level. And this is very, very important. Stocks will often pull back to their anchored VWAP as they're rallying, because this is the volume weighted average price of all the transactions from the point when the rally started. So something to keep in mind. So I think that Coinbase still has a little bit more gas left in the tank. Certainly the fundamental backdrop is strong here. They were added to the S&P 500, and then there's also that stablecoin legislation, which is bullish for the stock as well. And so just watch this week closely and see if it excuse me, comes in anywhere near this 8 EMA, which again is going to tie in. Both of these, by the way, are going to rise, obviously, and they're going to rise together somewhat. So you're going to see the 8 sort of dribble higher along with that anchored VWAP. But again, the confluence of those two indicators around that 330 level, I think, could be very interesting for a pullback buy in Coinbase. And that's my show for this week. Thank you so much for spending a little bit of your weekend with me. Let's recap a little bit of what we talked about. Markets still in full-on rally mode. However, two things you want to be watching out for. S&P cash 6230 area, which is the top of the channel. And also see if you get some major overextension from the 8-period exponential moving averages on both the S&P and the NASDAQ. That's usually an area where markets tend to stumble a little bit. All right, remember, tariff deadline is coming on July 9th. We don't know what's going to happen. Could be something, could be nothing. But I think between now and then, markets will continue to be more sensitive to any tariff-related news that is coming out. All right, I talked a little bit about market profile. If that value area island reversal happens, you can be sure I'll be the first one to report on it. To be honest with you, I'll probably be the only person in the world reporting on it, because nobody really talks about this stuff, although I think everybody should. But whatever, it's a very niche thing, but I think it's just of so much value. So you'll definitely get it from me first in the pre-market perspective. Beyond that, Coinbase does look like it is a buy on a pullback. So watch for that anchored VWAP, which is tying in perfectly with that 8-period exponential moving average, and see if that supports next week. All right, next week is a shortened trading week. It's actually quite short because Friday the markets are closed in celebration of July 4th, but they're also closing early on Thursday the 3rd at 1 p.m. Eastern. So it's actually a very shortened trading week, which should be interesting, I should say. All right, so be safe out there. I will see you next week. I'll probably record something on Thursday afternoon after that shortened period. Until then, I wish you good trading and good night.